What income can cause your Social Security benefits to become taxable? Well, we're going to answer this question today in our Financial Freedom video, so stay locked in. Hi, my name is Carson Graves, Certified Financial Planner and President and CEO of the Retirement Education Center.
And my name is Andrea Graves, Director of Operations at the Retirement Education Center. For additional concepts on how to maximize your retirement, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos. Now, Carson, taxes on Social Security benefits always get people frowning, especially when they're reminded that it was never meant to be taxable at all, right?
Absolutely. You know this from our class. When people hear that Social Security can be taxed anywhere from 50% to as high as 85%, it starts to put the fear of God in most people. But we're here to tell you that it's really not that cut and dry. That is why we make these types of videos, to educate people so they're not frustrated. So we're going to talk about what type of income can cause your Social Security benefits to become taxable. But before we do that, there are 2 rules to retirement income that we must give you. And Andrew, what are those 2 rules?
Well, rule number 1 is to never run out of money. And rule number 2 is to never forget rule number 1.
Okay, so let's go ahead and jump into our lesson today and talk about the taxation of your Social Security benefits.
Okay, Carson, so for starters, what Social Security benefits are taxable and what benefits are not taxable?
Yeah, I think that's a really good question to point out. So we'll put these on the screen for people to really see, Andrea. First of all, the taxable benefits are going to be retirement benefits. So that means that that's going to be benefits that you receive as a Social Security beneficiary. So that means you worked and you paid into the system, so you're receiving benefits. Those benefits are taxable or can be taxable. Secondly, if you are a spouse or ex-spouse, or if you are a surviving spouse or surviving ex-spouse, if you're receiving benefits off that record of the person that paid into the Social Security system, those benefits can also be taxable as well. If you're receiving disability Social Security, that's SSDI, not to be confused with SSI. But if you're receiving Social Security disability benefits, those benefits can also be taxable. And last but certainly not least, if you're receiving a family benefit, so you're taking care of a child under the age of 16 and you're receiving benefits off of a recipient record, those benefits can also be taxable. But here's what's not taxable. If you are receiving SSI, that's really Social Security benefits for people who are poor. If you're receiving SSI, those benefits are not taxable. And if you receive that lump sum benefit, that lump sum death benefit of $255 from Social Security, that lump sum benefit, as small as it may be, fortunately is also not taxable to you.
Okay, Carson, when it comes to Social Security being taxable, the one thing that I've heard you mention is provisional income. Could you tell us more about that?
Yeah, the terminology provisional income is really important when it comes to the taxation of your benefits, because when your provisional income exceeds a certain base amount, Andrea, that is when your benefits can end up being taxed anywhere from 50% to as high as 85%. So I think it's really important that today in our video we point out what is considered provisional income and how they may go about calculating that into maybe increasing the taxation of your Social Security benefits. So before we get started talking about provisional income, I always say that it's important for you to know your status, and that means your filing status. Now, if you are a single person or filing as head of household, if your provisional income is under $25,000, you have nothing to worry about because you will pay 0% of taxes on your Social Security benefits. But when that provisional income as a single person or head of household goes between $25,000 and $34,000, that is where you can pay up to 50%. And I always say up to 50% of your Social Security benefits. Anything over $34,000 as a single or head of household individual filing, then you can pay up to 85% of those benefits. Now, if your filing status is married filing jointly, those numbers are going to change a bit. So if you're under $32,000 a year as a joint couple, a provisional income, you pay no taxes on your Social Security benefits. Between $32,000 and $44,000 is where you get into the base of actually paying up to 50% on those Social Security benefits. Anything over $44,000 as a married filing jointly couple, you will end up paying taxes of up to 85% on those benefits.
So Carson, when it comes to provisional income, can you lay out what sort of income can cause your Social Security to be taxable?
Yeah, I think that it's really important that people understand that pretty much all income is considered provisional income when it comes to increasing the taxation or the probability of your Social Security benefits becoming taxable, Andrea. So things like your tax exempt interest, and we can lay this on the chart, tax exempt interest from municipal bonds. Yeah, if you didn't know this, when you receive that interest, although you may not pay state or federal taxes on municipal bond interest, when you get that interest, it is included in your provisional income. Also, any business income that you receive. Of course, any W-2 income, any income that you may receive from tips, dividends, or interest payments. Any income that you receive from taking money out of your annuities, any income from your pensions, any income from your IRAs, anything of that type of income is considered as provisional income, except one thing, Andrea, and that's income from a Roth IRA. Very important to make that distinction that a Roth IRA, if you pull money out of it, will not be included in your provisional income status, and therefore can be a huge benefit on the back end of your retirement when it comes to the taxation of your Social Security benefits. But once they add up all of that other income that you may receive, they take 1/2 of your Social Security benefits, not all of it, 1/2 of that, and they include that into your provisional income. And that is how they determine what bracket your modified adjusted gross income will fall into and determine how much of that Social Security benefits will be taxable.
Now, Carson, you mentioned that the income from a Roth IRA is not considered provisional income. So could you give an example of how that can affect the taxation of Social Security benefits for those who are watching?
Absolutely. I think that is really important to understand of why we have stressed so emphatically that Roth IRA dollars or income from a Roth IRA is not included as provisional income. I do want to keep it very simple for this video entry. Let's just say you're a married filing jointly couple and you have combined $40,000 of income coming in from Social Security benefits. Well, the first thing to understand is that they're only going to include half of that money for your provisional income status. So only $20,000 is going to be included in your provisional income. But you have $40,000 of total household income. So let's just say that you need $70,000 of income. And let's just say that you're going to pull that extra $30,000 that's needed from a traditional IRA. Well, that money is going to be included into your provisional income, Andrea. So now you have the $20,000 that's included in provisional income, plus the $30,000. All of that is going to be included as provisional income. So now you have a total provisional income of $50,000, right? So here, as you know, if you're a married filing jointly couple, anything over $44,000 is where you can have your Social Security benefits taxed up to 85%. But let's just take that same scenario where you have the $40,000 of income from Social Security and you're pulling that $30,000 from a Roth IRA, where here, none of that $30,000 is going to be included in your provisional income. So now in this particular situation, Andrea, you only have the $20,000 of Social Security income and the $30,000 is completely tax-free. So guess what? All of your income in this particular situation is tax-free. Your Social Security benefits are not taxable. Why? Because it's under the $32,000 of provisional income. And of course, money coming from that Roth IRA is not taxable. So that is why it is so important that you do proper planning in order to make this type of situation benefit you as well. Thank you again for tuning in to our Financial Freedom video. Please note that these videos are created for educational purposes only and that you should always seek out your own financial advisor, your own tax advisor, and your own attorney regarding your personal situation. And if you're looking for an independent fiduciary advisor to help you with these types of complex financial matters, we highly recommend that you utilize the links in our description below and go ahead and schedule a 1-hour free consultation with us today.
After this video, please check out our other videos that will give you tips on how to maximize your retirement. And if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
We have answers.